Solana is about to explode. When Bitcoin's spot ETF went live, it exploded 74%, from 42,000 to 73,000 in 2 weeks. Now Solana's ETF and staking ETF are here, and the floodgates for new capital and opportunity are opening right now. This is the moment every Solana holder has been waiting for, and institutions know how big this is. While most of the market is asleep and clueless, you have the chance to get ahead of the headlines and the crowd. Today, I'll show you exactly why Solana is surging and reveal 3 projects with the highest potential for this next wave. These are the names you're going to want on your radar before everyone else arrives. We're diving straight into the numbers, the stories, and the moves that matter. Let's get started. We all know, or those that know that Solana rivals Ethereum as a blockchain built for speed, usability, and global scale. Launched in 2020, Solana set out with a bold mission: build a network capable of running global scale applications for everyday users. Solana processes thousands of transactions per second. Block fidelity happens in fractions of a second, and transaction fees are incredibly low, which we know is essential for mass adoption, having most users paying less than a cent to send a trade. And on July 2nd, which is tomorrow, guys, first US spot Solana ETF, Rex Osprey Solana plus staking ETF hits the market. VanEck's VSOL is now listed on the DTCC's active and pre-launch list. VanEck is a heavyweight global asset manager trusted by institutions around the world, while Galaxy is a leader in digital asset investing, and both have filed for their own Solana ETFs now, joining a group of major issuers. Being listed on the DTCC means the ETF is officially recognized by the main clearinghouse for US securities, making it ready for institutional trading. The SEC has now given the green light to staking rewards directly from the Solana ETF, so investors can earn real on-chain yield. Fully regulated institutions are watching this closely. The CME Group launched Solana futures on March 17th. Both standard and micro contracts are now trading on the world's largest derivative exchange. Hedge funds and family offices also have a direct entry point into Solana at scale. So it's no surprise why Solana's on-chain activity has been surging. In the last week, Solana averaged 5 million daily active addresses. And in the last 30 days, over 64.1 billion index volume has flowed through Solana. The network now outranks Ethereum on volume. We are seeing billions in daily liquidity, millions in swaps, and a vibrant user base power this ecosystem. And Solana's stablecoin ecosystem has reached record speed, with more dollars moving faster between DeFi, payments, and trading than ever before. This velocity is creating more opportunities and use cases for everyday users and businesses across the globe. Developer activity is soaring too. Solana now has over 3,200 active developers, and most among all blockchains for new builders. New apps, tools, and protocols are coming online each month as well, bringing more value to users. Major financial giants are building with Solana. HSBC, Bank of America, Euroclear are tokenizing real-world assets on this network. Visa expanded USDC settlement on Solana as well across Central Europe, the Middle East, and Africa, enabling fast payments for global markets. And Kraken issued 60 tokenized US equities as digital stocks created using Solana's standard for digital assets. And Robinhood offers Sol and Ethereum staking along with a suite of EU stock tokens, providing simple, regulated access for everyday investors. So Solana's network network is healthy and stronger than ever. Over 1 billion in quarterly app revenue has been recorded for 2 straight quarters. The network has delivered 6 uninterrupted uptime. The network is secured by 1,295 validator nodes, and the Nakamoto coefficient stands at 20, a key measure of decentralization and resilience. Solana's roadmap features the most important upgrades. The Fire Dancer and Frankendancer clients from Jump Crypto are now live on mainnet as non-voting clients. These upgrades are designed to boost network speed and reliability, making Solana even greater and stronger as more users are joining in. The Alpenglow consensus upgrade aims to further boost speed and security, and Solana delivers scale, velocity, and reliability. Institutional participation continues to grow as well, with revenue flowing in. Builder activity is at an all-time high. Access to new capital is expanding through ETFs, futures, and enterprise integrations as well. So with all this momentum building, the Solana ecosystem is buzzing, full of energy and opportunity. And behind the scenes, or beneath the surface, hundreds of innovative projects are fueling its rise, shaping the future of DeFi. The future of DeFi, trading, and real-world applications. And if you want to understand where the real action is happening, you need to know which platforms are driving this ecosystem forward. We already explored Radium, a pillar decentralized exchange on Solana, in our last deep dive. So today we're opening up the map even wider. Let's break down 3 projects that sit at the heart of Solana's next wave of growth, starting with Jupiter. Jupiter is Solana's engine room for swaps, launches, and next-generation trading. Whenever you swap a token on Solana and get a great deal, Jupiter's technology is powering that trade behind the scenes. Jupiter began as a DEX aggregator. Think of a Solana trading pool as a digital pot of tokens, placed where people can add tokens so others can trade them, just like putting cash into a market stall so buyers and sellers can easily exchange. Jupiter checks nearly every major trading pool on Solana in real time and splits your swap across the cheapest routes. The platform now offers 3 main features. The swap aggregator connects you to around 30 Solana venues, securing the best rate on every trade. Jupiter's perpetuals desk, called Perps, let you trade tokens like Solana, Bitcoin, and Ethereum with built-in leverage. And you can do this all without going through a centralized exchange or lengthy identity checks. The LFG Launchpad provides a fair and transparent way for new tokens to launch. With deep liquidity and smart pricing, tokens like Jupiter, Jupe, and When reached real users from day 1. The numbers are massive. By July of 2025, of course, Jupiter had routed over 1 trillion in total swap volume. In the last 30 days, the platform processed more than 29 billion in swap trades, with over 400 million in perpetuals volume on busy days. Jupiter now routes 42% of all DEX trades on Solana, handling nearly half of the market. Jupiter's integration with Phantom Wallet brings best price swaps straight to users with a single click. When you swap tokens in Phantom, Jupiter's engine works automatically in the background. Jupiter is also a founding partner in the Ondo Finance Alliance, bringing tokenization securities and new types of real-world assets on Solana. The users base and community are huge. Jupiter has powered 1.7 billion swaps for 49 million unique wallets since its launch, and its LFG Launchpad has helped raise 1.2 billion for 78 different Solana projects. Right now, more than 1.6 billion is locked in Jupiter's derivatives pools, providing deep liquidity for all traders. And Jupiter's growth flywheel creates ongoing value for the community. Half of the platform's fees automatically go to buying back tokens from the market. Research projects that buy back will total over 100 million a year, supporting the token's value as the platform grows. The Jupiter airdrop story is a major chapter in the protocol's success. And in January this year, Jupiter's Jupeberry airdrop distributed 700 million Jupe tokens to more than 500,000 users. people who traded, staked, or contributed to the protocol. Over 2 million wallets qualified to claim. Of those 700 million tokens, 200 million went to carrots, is what they call them. Rewards for users who kept swapping, staking, or bringing new people into the ecosystem. This approach helped Jupiter cross the $1 trillion value milestone in 2025. The next snapshot for Jupiter 2026 is already underway too. So every swap you make can increase your share of the next airdrop. Jupiter's community voting system, the DAO, is paused until the end of 2025, while the team improves for better transparency and efficiency. A full upgrade is coming in 2026. Some people are watching now how the unlocking of more Jupiter tokens will unfold over the next 18 months. Jupiter's leadership continues to focus on platform growth and ongoing buybacks to keep the ecosystem strong. And Jupiter's partnership and integrations keep expanding as well. Phantom wallets depend on Jupiter for seamless swaps. The Meteora DLMM system supplies deep launchpad liquidity. Community launches like When and Sanctum, along with more than 75 other projects, have all used Jupiter's LFG platform to build their start and raise funds. So Jupiter is the place to swap tokens, find the best rates, and join the newest launches with a single. All you need is a wallet and a few dollars of SOL to try it out and see the orders splitting in action. Every trade supports new launches and real rewards for the whole community. Jupiter is Solana's price engine, its launchpad, and its trading desk in one seamless platform. The protocol leads in volume, innovation, and real users, and real user participation in Solana today. Next up, we're going to dive into another major force behind Solana's explosive growth. Jito. Jito is one of the most powerful engines behind Solana's growth right now. At its core, Jito unlocks a hidden layer of value called MEV, short for minor or maximal extractable value. MEV is basically bonus profit. Think of it that way. That comes from how transactions are ordered and included into Solana's blocks. Instead of letting only sophisticated trading bots and insiders grab that value, Jito built a system where those extra profits get shared with everyone staking Solana, not just a few big players. When you stake your SOL through Jito's liquid staking pool, you receive a token called Jito SOL. This token stays liquid, so you can trade it on decentralized exchanges or use it as collateral across Solana's DeFi. And what makes it special is its value goes up automatically over time because it collects both normal staking rewards and those extra MEV tips from Jito's engine. And right now, the average annual percentage yield, or APY, for Jito SOL is about 7.4%. That's roughly a full percentage point higher than standard Solana staking, giving regular users, people, a real edge in growing their assets. Jito's governance token, JTO, adds another layer. Holders get a voice in how the Jito DAO treasury is managed, and that treasury earns a share of all those MEV fees. Jito holders can also restake their tokens to help secure new Jito features like tip router and stakenet. More MEV tips flow through Solana, the bigger the potential royalty stream for Jito holders. Analysts see this as building a deep economic moat, a kind of fortress that protects a castle, that keeps Jito ahead of the competition. The numbers really tell the story. Jito now holds close to 2.85 billion in total value locked, or TVL. TVL is just a simple way of measuring how much crypto is deposited in a project. Think of it as the total pot that shows real trust from users. Jito accounts for about 35% of the entire chain's DeFi TVL, making it the single largest protocol on Solana. By comparison, Jito's TVL is more than 3 times higher than any other liquid staking leaders like Marinade and Blaze Stake. Validators users running Jito's client have earned over 1.29 billion in cumulative fees. And just this past June, Jito generated almost 33 million in platform fees alone. More than 30% of all network stake is running on the Jito validator client. And Jito's block engine now handles about 95% of MEV flows on Solana. Jito Sol is the #1 liquid staking token in the network. This level of adoption means Jito is deeply woven into the Solana ecosystem. You'll find Jito Sol used as collateral for yield in leading DeFi protocols like Drift, MarginFi, Kamino, and more. The most popular wallet, Phantom, lets users convert their regular staked Sol to Jito Sol with just one click, making those extra rewards instantly accessible to everyone. Institutions are noticing too. In June, the public company Sol Strategies became the first listed firm to hold Jito, JTO, on its balance sheets, buying over 52,000 Jito and settling up to 100,000 ecosystem reserve. Kamino Finance also now pays out 10,000 Jito every month to Jito Sol liquidity pools to help keep trading deep and active. Jito's potential just keeps expanding. As Solana's network usage explodes with meme coins, high-frequency trading, and all kinds of new apps, every extra dollar in MEV tip revenue flows directly into Jito's ecosystem. That means more rewards for users and more income for the protocol. Jito's new products, like Tip Router, are now sending 3% of all MEV tips straight to both Jito and Jito Sol stakers, so every user can benefit from the network's growth. Analysts like Multicoin Capital have gone deep on the numbers. Their March 2025 report values Jito at 11.63 per coin, over 4 times its current price, if fee growth keeps up at this pace. With Jito already routing about 95% of Solana's MEV block engine market, it would take a huge leap from competitors to catch up. Think of Jito as the road crew paving Solana's blockchain highway, while letting every user earn a toll rebate just for using it. Jito has made an extra income button for everyone. The protocol runs on real fee revenue, keeps growing fast, and it's connected across every corner of Solana's world. Always do your own research and remember that yields and prices can change quickly. But right now, all the data points to Jito as one of the most important, innovative, and high potential projects on Solana. Next, let's break down another essential pillar in the Solana ecosystem, Kamino. Kamino Finance is Solana's all-in-one DeFi autopilot. This protocol lets anyone earn yield, borrow, or use leverage. Everything happens inside a single beginner-friendly dashboard. Kamino launched in 2022 with automated liquidity vaults. Users deposit their tokens and Kamino vaults pick the best price range on platforms like Radium or Orc. Fees are auto-compounded and users receive a yield-bearing token called K-token, which works across the Kamino ecosystem. By May 2025, Kamino launched Lend V2, an upgrade with modular credit markets, spot leverage, and soft liquidations that trim 20% of debt and risky positions. Users can deposit, earn, borrow, and loop leverage all in one place without switching apps, which is the future that's beautiful. Every transaction settles at Solana's speed, usually in less than a second of a fraction of a cent. Kamino gamifies the experience too with its points hub, where every action earns points for a live leaderboard. Kamino is the largest non-staking DeFi hub on Solana with about 2.4 billion in total value locked. The protocol holds 27% share of all Solana's DeFi activity. Outstanding borrows are at 1.54 billion. Kamino's annualized fees reach 105 million, with 21.5 million in protocol revenue and 6.8 million in fees generated in the last month. Its market cap is at 132.8 million and fully diluted value is 601 million, both trading at less than 3 times the protocol's annualized revenue. growth has been consistent. In January this year, 2025, deposits increased by 31% to 3.8 billion, and borrows rose by 36% to 1.5 billion before Lend V2 launched. Assets deployed across Kamino's full suite now top $4 billion. And since April, Kamino Swap has seen about 800 million in trading volume. Vault yields range from 0.88% up to 8.63%, with average near 5.35%. Users can earn competitive yields without the need to constantly monitor or rebalance positions. Kamino's partnerships stand out. In June, Kamino became the official integration partner for XStocks, bringing tokenized US equities like Apple and Tesla onto Solana. With XStocks, users can now trade stocks and use them as collateral in Kamino Lend. Users can borrow against stocks and loop their position up to 3 or 4 times leverage, all on chain in one place. This opens new doors for users around the world who want to access stocks and capital efficiency. The protocol has integrated with more top names. Maple's Syrup USDC, I love the name, a yield-bearing stablecoin, now works with Kamino Lend, Multiply, and Vaults. Users can earn treasury yields and double dip for more returns. 4 days after launch, Syrup USDC brought in 25 million in deposits. Securitize Acrid Tokens Credit Fund is set to debut on Kamino. Securitize is one of the best known names in tokenized real-world assets and a leader in bringing regulated credit and traditional finance onto blockchains. This partnership expands Kamino's collateralized base and brings new opportunities for users. DeFi DevCorp became the first public company to hold a liquid staking token on its balance sheet and picked Kamino for its integration. Kamino's security stack is a highlight too. The protocol has completed 14 external audits with Certix, you see how I say this, Kudelski, and Hellborn, plus a live Immunify bug bounty. This level of security gives confidence to both retail and institutional users. Kamino's features drive capital efficiency and user safety. K tokens are liquid and can be used as collateral to borrow USDC, SOL, JLP, and other assets, or to loop average on the same dashboard. Lend V2's soft liquidation engine trims only 20% of debt, so users aren't wiped out when volatility hits. Every feature gives confidence to both new and experienced users exploring yield and borrowing. Composability is a core advantage for Kamino. Composability basically means you can use different types of assets and features together, like mixing building blocks to create new financial strategies in one place. With over 4 billion in assets deployed, the protocol can wrap up almost anything as collateral: liquid, staked SOL, yield-bearing dollars, tokenized stocks, and regulated credit funds. This flexibility, combined with proven fee revenue, rapid product updates, and a fortress-like security track record, places Kamino at the center of Solana DeFi. Then again, keep in mind, yields and rates in DeFi can move fast, so staying informed is always important. Kamino's numbers show why it is the default money market liquidity layer for the next wave of Solana's users. Now, let's bring it all together and close with the most important takeaways from today's Solana ecosystem deep dive. So in closing, we've just witnessed a breakout moment in Solana's story. With the spot ETF and staking ETF now approved, institutional money is entering at scale and the ecosystem is growing faster than ever. Solana now handles millions of transactions every single day, leads all blockchains index volume, and supports more than 3,200 active developers. Today, you saw exactly why momentum is building. Jupiter is Solana's price engine, driving $1 trillion in swaps and routing nearly half of all DEX trades. Jito unlocks billions in extra yield for stakers and leads Solana liquid staking with 2.8 billion secured. Kamino is the gateway to seamless DeFi with 2.4 billion in deposits and deep partnerships across crypto and traditional finance. Our mission, my team and I's mission is for you to stay informed with the highest quality research and updates. So if you found today's video informative, I would just ask you like the video and share it with a family member or your mom or somebody who needs to hear this. And take care. I love you very much. And yeah, I'll catch you guys in my next video. Ciao.